What have we currently seen? After suffering significant losses in 2022, Bitcoin and other cryptocurrencies have recovered in the first part of 2023. The current cryptocurrency season has, however, brought to light flaws in the digital currency market, such as excessive risk-taking, exploitative securities marketing, and blatant fraud. The US Securities and Exchange Commission (SEC) seems more determined than ever to clean up the cryptocurrency space this time. Some investors contend that additional laws will legitimize the space, while others worry that an excessive amount of regulation may lessen the decentralized attraction of the industry. Now, the primary question is cryptocurrency a security? The question of whether cryptocurrencies should be categorized as securities, commodities, or currencies, or something else is one of the most contentious issues in the regulatory discourse. The Commodities Future Trading Commission (CFTC) would be the main US regulator of the cryptocurrency if it were classified as a commodity like natural gas, coffee, or crude oil. If cryptocurrencies are recognized as currencies, then this organization, which oversees currencies transactions, would also control cryptocurrency trading. However, cryptocurrency would come under SEC regulation if lawmakers and regulators adopt the viewpoint that it should be regarded as a security, much like stocks, bonds, and exchange. According to SEC Chair Gary Gensler, the majority of cryptocurrencies are securities according to the Howey test, which was established by a 1946 Supreme Court judgment in the SEC versus W.J. Howey case. This is what SEC Chair Gary Gensler said, quote unquote, "As the best cope, we will continue to pursue these companies, look into their operations, and adhere to the law and facts until they comply." But Gensler has also distinguished Bitcoin as an exception, referring it as a commodity. To understand better, we need to go through the details of the Howey test and the findings. A transaction is deemed to be a security under the Howey test if it satisfies the following four requirements. There is financial investment. It is anticipated that the investment would make money. The money is invested in a joint venture. Through the efforts of others, profits are made. For years, the SEC and other authorities have been working to control illicit behavior in the cryptocurrency space. Nonetheless, their efforts have gained traction with the collapse of the cryptocurrency exchange FTX in November 2022. But there has been some fallout from the US crackdown. Congress heard Gensler's testimony in April of 2023. The SEC, according to Republicans on the House Financial Services Committee, is pushing Bitcoin platforms abroad, endangering American leadership in the development of digital assets globally. Coinbase filed a writ of mandamus petition in April as well, requesting that a judge order to the SEC to reply to a 2022 request that the SEC establish a precise set of guidelines for determining whether or not a token is a security and outline the legal procedures for issuers to register with the SEC. There are more incidents like these. Let's have a look. In March 2023, the world's largest cryptocurrency exchange, Binance, was sued by the CFTC, which claimed that the platform had enabled US consumers to trade unregistered securities. The SEC notified Coinbase of possible violation of the US securities laws earlier in March by sending the exchange a Wells notice. Paxos, the stablecoin issuer, had already received a similar warning from the SEC. The SEC ordered Kraken to shut its cryptocurrency staking operation in the United States in February. The company had been offering up to 21% in annual profits afterwards. Kraken settled civil fines and a disgorgement of $30 million. The SEC accused cryptocurrency exchange Gemini and lender of Genesis of marketing unregistered securities in January 2023. Within days, Genesis filed for bankruptcy protection. The SEC filed many allegations against FTX founder Sam Bankman and several other FTX-affiliated individuals for their alleged roles in defrauding investors after FTX folded in November 2022. Since then, 3 FTX-related executives, including co-founder Gary Wang, CEO of Alameda Research Caroline Ellison, and Director of Engineering Nishad Singh, have entered guilty pleas and are assisting the prosecution. The SEC accused former Coinbase executives of being involved in an insider trading scheme worth $1.1 million in July of 2022. BlockFi, a cryptocurrency lender, consented to pay the SEC $100 million in fines in February 2022 for neglecting to register the sales of its retail crypto lending product after FTX filed for bankruptcy. BlockFi proceeded to file for bankruptcy protection in November 2022. The SEC filed charges against BitConnect executives in September 2021 because they ran a Ponzi scheme and misled investors out of $2 billion. The SEC accused Ripple Labs and its management of conducting unregistered securities sales in a lawsuit filed in December 2020. Whether or not Ripple's cryptocurrency XRP qualifies as a security is at the center of legal dispute and will probably file for settlement this year. Regulation is not only coming, but it's necessary and welcoming. This is what Cohen and Company Capital Markets head of blockchain and digital assets, Christian Lopez, said. The lack of regulatory clarity is a major concern in the crypto world. The industry would welcome reasonable guidelines to operate within, provided that they will not impede innovation, says Lopez. In light of this, Lopez claims that when it comes to offering a secure future for investors and entrepreneurs in the cryptocurrency space, the United States has lagged behind most of the world. It's not just the crypto organization, but also stars embroiled in cryptocurrencies problems. The SEC has taken actions against various celebrities who were involved in the illicit promotion of cryptocurrencies, in addition to prosecution, cryptocurrency exchanges, and other platforms. Star Kim Kardashian settled $1.26 million in fines with the SEC in October 2022 for endorsing Ethereum X without informing what she got in exchange. Actress Lindsay Lohan, social media influencer Jake Paul, boxer Floyd Mayweather Jr., singer and musician Akon, and music producer Khalid. They are among the list of rising celebrities who are accused of similar offenses. What do crypto investors stand to gain from the SEC crackdown? The crypto crackdown poses a threat to the decentralized structure of cryptocurrency, which first drew in large number of investors. It may make it more difficult for American investors to trade their preferred digital currencies, though many cryptocurrencies exchanges, lenders, and funds have gone bankrupt in the last year. Many experts concur that clear regulations are necessary for investors to feel safe when using these platforms. More stringent cryptocurrency regulations are required. This is what AskTraders.com senior cryptocurrency analyst Nick Ranga is saying, and determining on the cryptocurrency investors. Tighter regulations of cryptocurrencies will undoubtedly safeguard investors as they stand a chance to lose money if exchanges like FTX fail. According to Ranga, regulations would probably restrict the use of cryptocurrencies and would possibly discourage industry innovation. Investors in Bitcoin have no cause for alarm, according to Sam Callahan, principal analyst at Swan Bitcoin, regarding the SEC's enforcement. Since Bitcoin has been declared a commodity, owners can stop depending on exchanges or other middlemen by taking the self-custody of their holdings. According to Callahan, one of the main reasons Bitcoin is special, there is no counterparty risk. The price movement in the cryptocurrency market is possible. The best news for investors worried about the SEC's investigation: 2023 has seen a 70.3% increase in the price of Bitcoin, while Ethereum and some other popular cryptocurrencies have increased by more than 50% year to the date. For more updates, keep watching CoinGate TV.